Welcome to Business Influencers. Hope everyone is having a great week. If you're new to Business Influencers, you found us here at TALRadio, which is part of the Touch of Life Foundation. We are so excited that the show now is over a year old. It's hard to believe that we are over 1 year. And again, every week we continue to bring in subject matter experts sharing their words of wisdom, allowing you to get to decide how that can help move you and your personal business forward. This is also for organizations to help them as well move your companies forward. If you have any questions, feel free to reach out to us at chris@christophersalem.com. Today's show is being brought to you today by Alumni Direct. Alumni Direct is a new social media community platform dedicated to bringing alumni together from all different generational types, an opportunity to rekindle old relationships, perhaps meet new people for the first time. Feel free to reach out to Alumni Direct and find out more about their membership program. Takes all the noise out of social media. You have opportunities to tap into a wide array of different services that you normally would not get that could help move your business forward. Check them out at alumnidirect.com. That's alumnidirect.com. What we're going to be talking about today is safeguard your financial future for 2023. And we're here with David Rosenstrock. CFP is a certified financial planner and director and founder of Wharton Wealth Planning. He earned an MBA from the Wharton School of Business and a BS in economics from Cornell University. Wharton Wealth Planning is an independent fiduciary investment advisory firm that serves clients with their retirement planning, investment management, and cash flow needs on a virtual Zoom basis as well as in person. Now, David has over 25 years of experience in professional finance and started his career as an analyst at Goldman Sachs. As an independent wealth advisor, his firm can choose from any product that is available based on what he believes could be best for their clients. His philosophy is that independent fee-only fiduciary advice yields the best financial solutions. David has contributed to articles on investing and financial planning for Yahoo Finance, Fortune Magazine, MarketWatch, MSN, ETF Trends, Morningstar, Physician on Fire, and Go Banking Rates, and was a guest on Retirement Wisdom Podcast. Visit his website at whartonwealthplanning.com, which we'll mention here a little bit later at the end of the show, how to contact him. He also serves as an experienced volunteer on many nonprofit organizations in his community, including the Police Athletic League and a local food delivery service for the homebound. Without further ado, we welcome David Rosenstrock to the show. David, how are you doing today?
Hi, Chris. It's great to be on the show today.
Yeah, it's a pleasure to have you. And we were looking forward to really hearing this. Here we are, the early part of 2023. And everybody has, something to kind of look at for, this year, and that's their finances. And what are some of the things that you could start sharing from what you've seen in your career, being in this industry for a long time? Last year, what was going on? What are some of the things that for 2023 people should be looking out for to safeguard their financial future?
It's a great question. So I recently listened to your podcast back with Jeff Michelle in December 2022 on the topic that trust is a double-edged sword. And I wanted to comment on that quickly, as I think that was particularly relevant to today's world, and just the fact that there's many different types of advisors out there, financial advisors. And one thing I've realized is that most people don't necessarily realize this. And I think it's really important to understand what sort of questions you need to be able to ask, or you should be asking. And those are things that could help you safeguard your 2023 and beyond. So a fiduciary advisor is basically the highest standard of care an advisor can have towards a client. There's different types of advisors. Some advisors just have basically to meet a suitability standard, and a suitability standard determining that which product might be suitable for you isn't going to give you the same level of protection that other advisors might give you. There's also advisors out there that are fee-only advisors, and these advisors basically just work on a fee basis. It's stated up front. There are no commissions. There are no payouts from third-party companies if advisors use their products. And so fee-only advisors could be really good if you're not sure what type of advice or product you need, or if you're basically having somebody manage your assets for you, and you're basically safeguarding things that you might not know about, or expenses that could be a little bit hidden, for example. So there's definitely a lot of, I've realized there's definitely a lot of potential conflicts of interest out there in the financial world. And I think it's really important that people are just aware of these things. And when they do their screens, they ask the right questions. And they're also very mindful that these things can have a really big impact on their future, and the way they're going to be able to live in retirement and achieve the goals that they're trying to achieve. So one of the things that I think is really, really important is building a financial plan for the future. You know, this year, to your point, there's been a lot of things that have hit the screens and people's TVs, people's radios, and people's portfolios regarding the markets, the war with the Ukraine. Inflation went to a 40-year high. Interest rates have really moved up very significantly. There's a lot of concerns out there, and having a financial plan that's in writing and formalized can really help you safeguard the future, in that should there be hiccups and bad years, you have a plan that you're on, you have a course of action that you're trying to follow, and these short-term aberrations and movements shouldn't really deter you from following that plan and make you make bad decisions, for example. Having a plan could also serve as a source of motivation and a source of commitment in terms of what you're trying to accomplish. And it also helps you uncover problems that might exist that you don't even realize existed, and prevents you from not taking advantage of all the different benefits that you might be able to take advantage of for the future. And so I think having a formalized financial plan is a really, really important thing that everybody could sort of put on their calendar for the year. And that's really going to help them in the future going forward, because we definitely are in some pretty uncertain times right now.
Yeah, no doubt about it. No, sir. And what would you say, like I said, when you look at, your finances, I mean, what would you recommend people that are, whether if they've never used a financial advisor in this case, or maybe they've been doing it themselves and it just seemed like they're not getting along, what would you recommend would be the first step that they do to kind of, like you mentioned about trust, and that's so important, because I always call them trusted advisors, and you got to be able to have that trust in order to really feel comfortable that somebody is looking out for you. In this case, with what you do, you don't work for a particular fund or a certain, like a certain company. You represent different funds that are out there, or different investment vehicles that are going to be most appropriate to that person or that family. What would you recommend? Like I said, gathering some information, like what would be some of the things to look for?
Sure. Well, yeah, I think your point is a good one. So, Wharton Wealth Planning was founded to be independent and to basically try to avoid a lot of the potential conflicts of interest that exist out there in the marketplace. When I'm working with clients, I really try to get to know the client. I think that's important, because no two clients have the same goals and the same financial circumstances. You could have a 55-year-old male client in one place and another 55-year-old male client in another place. and they could have very, very different needs and circumstances and goals. And so the advice that they get should be different. It shouldn't be, basically the same thing. And so I think in looking and thinking about what to sort of think about, I think you really want to, when talking with an advisor, you really want to understand their educational background, what their areas of expertise are. You want to understand what their level of commitment is to the profession, as well as to you. And I think those are all really things that are important. I think there's anytime you start a financial plan with an advisor, there should always be a very meaningful discovery process where you're really going through all sorts of things in your financial past and your present financial condition. And you want an advisor, I think, in a lot of respects, that could bring all the different pieces of your financial life together. There's insurance, there's investments, there's retirement accounts, there's taxes, there's trust and estate planning, there's education planning, sometimes there's families and small businesses. And I think you really want to sort of, to the extent you can, be comprehensive, bring all these pieces together so that you could really get the best customized solution for yourself. And that's going to end up saving you in a lot of different ways, from at tax time, on the investment side, in terms of your returns, and in terms of your risks as well. There's definitely a lot of risks out there, and a good advisor should basically help you manage the downside of those risks, and that could be done in a lot of different ways.
No, absolutely. No, absolutely. And so, when you look at savings, when I think about, I know I was taught about the power of compounding, and a lot of times people don't think about that because they're only thinking about where is it now? I got to have the results now, but they don't see what the power of compounding is long term. And I know as financial advisors, a lot of them will talk about that magic of compounding, and better to start early rather than later. But hey, if you didn't start early, hey, you still could start wherever you are. Can you talk a little bit about again, the importance of putting money to work, whether if it's weekly, monthly, quarterly, obviously annually, but even on a weekly, monthly basis, quarterly basis, anything that's going to help to allow that money to work for you rather than you just working for it?
Yeah, no, that's a great question. So, I think there's always one of the things that I definitely find, whether I'm talking with clients or just whether I'm volunteering and talking with people that are retired, is there's always surprises. And just the other day, I took my kids out for ice cream, and by the time they self-served themselves extra ice cream and put on some additional toppings, the bill came to over $20 for 2 kids. So things aren't always what we remember them as. Inflation is really high, and that's causing prices to increase in lots of different areas. And I think compounding and the magic of compounding really helps you safeguard against that. And so let me show a little chart that I have here.
Yeah, we'd love to see that.
Let me show a little chart that I have here. I think, compounding basically helps you earn profits on profits and interest on interest. And it's really one of the more powerful concepts in finance. So I'm glad you brought it up. This is an illustration. If you start to contribute $500 a month, starting at age 25 versus age 35 versus age 45, this is an illustration of what you could expect to have at the age of 65. Now, this assumes about a 7% rate of return, which I think is fairly reasonable. When you sort of factor in bonds and stocks and some allocation between those. And as you can see here, if you start at 25, you could expect about $1.3 million, that money to turn into about $1.3 million by the age of 65. If you start at age 35, you're looking at a little over $600,000. And if you start at age 45, you're looking at about 200 and call it $235,000. And so the differential is very significant between these different alternatives and starting points. And so I think the point is, to the extent you could really plan and plan early and figure out your budget and start to put that money into the market at an early age. There's different types of accounts depending on whether you're employed by an employer or you're self-employed, and those accounts are really important. But the differences will be really extreme, and that's really a point that I really wanted to drive home for people there. Now, I'll also say, I could think of a situation recently where a physician I know, he was planning on working until 80. And by the time he's had so much problems dealing with insurance clerks and all the different processes and administrative processes that doctors are having to deal with, he's just decided to retire about 10 years earlier than that. And so compounding and the chart we just showed, that concept really helps you have flexibility to make those sort of changes, to give yourself the opportunity to have that flexibility. And I think I don't know anybody that doesn't want to have a lot of flexibility when it comes to being able to sort of do the things they want later in life. Work situations change. There's always uncertainty, and sometimes surprises aren't always positive. And so, using compounding and using a financial plan are really things that can help you in the future and give you flexibility and really help your family a lot as well. So I think it's something that I really wanted to make a big highlight for today.
Yeah, I agree. And I always think that even if you're somewhat, you understand this yourself, I think it's still important that you align yourself up with a trusted advisor like yourself that can provide more insight and maybe see those blind spots that we all have. And especially when it comes to finances, we can easily overlook those things. Or, there could be something that you see that could help them to really not only stay on track, but actually go farther ahead than they anticipated. So, yeah. What are some other things you could share, David, in terms of other safeguards that you'd like to share? Some things like any trends or anything that you're seeing heading into 2023? I know we talked about inflation and all these things that we're experiencing right now.
Sure. Well, another thing I'd like to point out is, education costs. I was actually just looking at them. Published in-state tuition and fees at public four-year universities averaged about $11,000 during 2021, 2022. And this compares to about $38,000 at four-year private nonprofit universities. So those are big money, big numbers, and you're looking at about $160,000 for those private universities. And so I think for people that are thinking about education planning, have children, 529 plans, and really taking advantage of that concept we were just talking about, compounding. 529 plans could really help you save a lot and have more for your education expenses down the road. And so what happens is, with 529 plans, you put the money into the account, and when you pull it out, all the profits don't get taxed. So as you might recall from that chart, at the end of the day, there's a lot more money there, and that isn't getting taxed. And so that's just going to save you a lot in the future, and make sure that you have less debt and more opportunity there for different educational things. So I think that's a really important one that I like to point out at the beginning of the year. It's easy to sort of push some of the financial stuff to the side. It's generally a little bit time consuming. It's a little bit stressful. There's a lot of other things going on in everybody's life, but to the extent you can really just spend that time early on in the year and just get it started and try to put it on autopilot, that's going to really help a lot. And I really like to think of that as as a really big safeguard. One other one that I'll mention, healthcare expenses. It's one of the largest expenses that really people have in retirement and outside of retirement. I don't know anybody that doesn't really complain at least a little about the cost of all the different, healthcare plans that are out there. And I think health savings accounts, if you qualify, give you a triple tax advantage. And I don't know anybody that doesn't want to save at tax time. A lot of people I find don't really know about them, or for one reason or another, don't use them. And the triple tax advantage shouldn't be overlooked. And I'll tell you quickly what it is. Basically, as you put your money into the HSA, you don't pay taxes on it. So that's a great opportunity. That the tax code gives you that benefit. And if you invest your money, which I highly recommend you invest HSAs, I think a lot of people put the money in the HSA and then pull it out and use it for their expenses. But I think one of the big secrets to the HSA that gets overlooked is if you invest it, you could really use it down the road, almost as far as down as into your retirement. And then you're going to be able to take advantage of the power of compounding and really growing your money. And when you pull the money out, there's no taxes on the money that you put in, the initial principal that you put in, or on the gains either. So that's the triple tax benefit to it. And there's really there are very few accounts that offer that sort of benefit.
Yeah.
And so it could save, a family a couple $1,000s a year in taxes. And I don't know anybody that doesn't love saving at tax time, taking advantage of these opportunities. So I think that's a really important safeguard as well. And I like to bring that up early on in the year because, again, it's one of those things people can really start to take advantage of. And I do think there's some real opportunities out there for investing right now as well. So I definitely like bringing up that opportunity.
Wow, that's awesome. So yeah, I love that you shared something even about the HSA, because especially now with healthcare. But hey, there might be some times that we may have to dip into that, But if we're investing, we're making more money on that money, so that can help to cushion in the event if we have a medical emergency, that we're not taking money from other investments to make up for that. Because it seems like now that healthcare is getting more and more expensive, and benefits are only covering a fraction of what they used to cover.
I agree. It's definitely a topic that's on people's minds and is a little anxiety provoking. And so I think to the extent you can plan for it, to the extent you can make sure that you have it, you have a plan around it. That's gonna help you a lot in the future and down the road as well, when there's just more money in that HSA to take advantage of and use for all the different things that you might want to use it for.
Yeah, absolutely. Anything else, David, that you would like to share when it comes to safeguards for 2023? Anything else that you would like to point out about the importance of at least doing your due diligence, going out there and seeing what's available to you to help people get ahead? Because every time we try to get ahead, something else comes in to help push people down. But yet our futures are in our control. We have to do what we can within our control to create that. As an independent financial advisor, somebody that works with so many different people, what would you say to that? Again, just to reinforce the importance of not taking your finances for granted and putting faith into someone that could help you, guide you for, a better future.
Yeah. So, when I started Wharton Wealth Planning, I really wanted to bring together my educational background from the CFP and from my MBA in finance, and my work experiences, and really my beliefs. And I wanted to really provide what I think is the best and conflict-free advice for clients, because I think that is really yields the best results when you're able to look at the universe of what's out there and really customize and cater to the specific needs of the individuals. And there's no shortage of products that are out there, whether you're looking at investing or whether you're looking at insurance or whether you're looking at a range of other alternatives. And I think it's just really important to just ask those questions as to what the alternatives might be. If you're being presented with a product, well, what are some of the alternatives? And I think in the financial planning process, that's a really big step. One of the things after I analyze is I think about what my recommendations are after I analyze the information that we collect from the client. But I think about what my recommendations are, but I also think about alternatives because, it's not only about the dollars and the cents sometimes. Sometimes it's about really what people feel better about, what people's beliefs are. And so I think it's really important to just figure out what the alternatives are and have really good conversations that you really feel a good amount of trust and that you feel like there's a lot of commitment from your advisor. And one thing I like to focus on with and can focus on with clients that are interested in it is something called ESG investing. A lot of people are interested in they have certain beliefs and values, and ESG investing could really help you basically make sure your money is going towards the types of your investments are going into the types of companies that really share your values, whether it's protecting the environment, social issues, different types of governance issues that are out there that are important to people. And so I definitely like to talk to people about that to the extent they might have interest in it and they express that. And I think also one of the big secrets, I think, is, ESG investing, it doesn't mean you're necessarily going to accept lower returns. A lot of studies and a lot of data indicates actually that you're going to have the opportunity to actually do better and have lower risk. So I like to sort of bring that up to people. But I think having that conversation, that two-way feedback is really important. And as things go on, the process of assessment, people's situations change. We've definitely been in a very rapidly changing world with the way everything has gone on over the last several years. And as those situations change, it's important to have that dialogue with your advisor, feel comfortable with having that dialogue, feel comfortable with being able to ask your advisor questions that might concern you, and make changes to your plans, because it's really important that your plan changes along with you and your family's evolution as well. And I think that shouldn't be overlooked. Yeah.
Awesome. Well, first of all, I want to thank you. We're towards the end of the show, and I want to thank you for taking time out of your busy schedule to be with us here today to share this valuable financial advice that is so imperative, especially here at the beginning of the year now, where people have the whole year now to make that shift and transform their financial future for the better. How can people get to know you a little bit better and reach out to find out more how you could potentially help them, or at least get an opportunity to gather some information about why and what you do?
Sure. So I could be contacted at david@whartonwealthplanning.com. And anybody that wants to reach out and talk further, explore some of the topics that we spoke about today, or just has a question they want to speak about, I'm definitely happy to schedule some time. I definitely like getting time to know people and love helping people with the things that are on their minds. So that's a great way to start. And there's lots of content, as you mentioned, on my website as well, that could be really helpful for people that are just looking for a little bit more information first before having a conversation. And that's another great way to, I think, delve into some of the the topics that we just spoke about today.
Well, David, thank you so much for being here. We greatly appreciate it. Again, reach out to David Rosenstrock again, CFP, also an MBA, again, a wealth of knowledge in the financial area. Feel free to reach out even to us, and we'll make sure to put you in touch with David as well. But you do have his contact information. With that being said, everybody, we want to thank you listeners each and every week joining us here at Business Influencers. Check us out on TALRadio and check out the other programs that are available to you on TALRadio.org. There is content for almost every topic you can think of there. So again, take advantage of that at TALRadio.org. Till then, everybody, have a great rest of your week, and we'll see you next week.